Okay, folks, welcome back. This is our midweek review for November 6th, 2019. And we're looking at the dollar index. This is our daily chart. All right, so we have a price run above the short-term high here so far. The old high on this candle, if I can get it to pop up. Got to remove this rectangle here. We have the high at 97.78.5, and the high on this candle comes in at 97.81 even. So we had a run on that liquidity, and I sent a post to the forum yesterday and tweeted it. The focus is here. Do we leave this open or run it, and then do we trade through that? Because if we go through that, then this becomes a factor. Until this fair value gap is broken and traded basically north of it, not just spiking through it and coming back down. It's got to be up there and close above it on a daily chart. And then I'm going to be concerned about this here. Otherwise, we're still banging inside of a dealing range between this balanced price range and these relative equal lows. So we're kind of stuck in between basically this. Let me show you what I'm looking at. And it's not easy right now. Okay, so if you're all thinking it's hard and therefore I'm probably having an easy way with this, I'm not. It's very challenging for me as well, because unless we're on a very, very low time frame, it's just not working out in terms of most of the setups. So here, another rectangle. All right, and there we are. All right, so we're banging between this balanced price range and this price range that's balanced here. Okay, so this is the only upside premium array that I'd be interested in. And if it fills it, wonderful. I'd like to see it go lower after that. If it goes higher than that, then we have to consider this buy side liquidity pool as a draw on liquidity. Okay, so right now, it's a waiting game. Okay, it's still an intraday scalping market, day trades, and directional bias, in my opinion, is not definitive in terms of one way or the other. So it's kind of like a iffy type scenario. I would have rather seen it trade immediately softer going into the week and start trade below here on the cash market. This is the equivalent to the December futures contract for dollar futures when it's shown in AVA trade. The cash market that's shown on the DXY symbol on TradingView, that's the actual cash index, and it went slightly below this low over here. So we didn't see that in the futures contract price, and you can see that also. You can go to like barchart.com and see that, or you can pull it up from TradingView. Incidentally, I'll toss this out there too. This will be the last week we use AVA Trade. Okay, I'm actually going to be moving away from demo accounts and going to tradingview.com. So I've elected to do that. It's just so many issues with AVA Trade. This thing's supposed to never expire. Mine expires. It also has issues where it freezes. Last week, right before the Canadian rate announcement, it froze and didn't give me access to the data for almost like 30 minutes. And then the market, was trading post rate release. So these are all things also you all are aware of too, because most of you are emailing me about it. And it also just saves on all the which demo account should I use. We don't need to worry about it because there's a paper trading application that TradingView allows you to have there as well. So it's the same thing. Everyone's going to see the same charts now. Everything's going to have the same highs and the same lows. Whereas across all different demo brokers, if you're doing that, it's going to look slightly different, and it'll also save me 1,000 emails a month just in that alone. So anyway, I know some of you have sent me emails about some demo providers. You can stop doing that. I appreciate it, but you can stop. I'm going to be using tradingview.com. I have to be real careful how I do it now, though, because if I publish charts, not certain that they're going to be able to see that at TradingView, like those individuals that own the company and I guess the back office folks that would be in charge of being able to see all that stuff. Even though there's a toggle for making my things shared or not shared, I just got to be real protective of how I do it. So we'll see how that works. But nonetheless, like I said, this will be the last week. So when I do my commentary on Friday evening, this demo account will no longer be something I'm worrying about. And it just makes it easier for all of us to have the same medium, and TradingView will suffice in that regard. Plus, it also allow me to review like commodity markets, the bonds, which is also there's individuals that are studying the bond market portion of the mentorship, and you're asking how I can give you charts or a link to take you to charts that show you setups like that in your lessons. And we'll do that with TradingView. So bear with me. We'll have all those things going forward. Obviously, that creates an issue with indicators. Okay, and I've already been conditioning you folks by not having any of the indicators on my chart. Everything's been hand drawn manually, and I prefer that anyway. The indicators saved me a lot of time when I was doing video work. So it just was a click, and the Asian range would be there, and click, and there would be other things like highs and lows. But you've seen me do 2.5 years now of just simply annotating the charts manually, and it doesn't take me long to do it. In fact, I feel closer to the market by doing it this way. I know some of you are going to be, but I want these gimmicks on my chart. I want to be able to click it. Okay, well, it is what it is. MT4, those indicators are posted on the 12th month content. If you want to use them in a demo account, or if you ever go to a live account and you want to use it in an MT4 setting, be my guest. Okay, but you can see that I don't require them, and if you study the content correctly, you won't really require them either. All right, so anyway, if we stay within this inside this range here between the fair value gap and the equal lows, this could be the range for the week. We could see a failure to even go any higher or go lower. Okay, so ultimately, what's the takeaway? I was looking for lower. It didn't do it. And it's exactly what I stated about dealing with high resistance liquidity runs. Okay, I'm going to show you actually my trades for this week, and you'll see the difference in trading in this environment versus when I tell you that we are in very easy low resistance liquidity run conditions, and we could see prolonged moves on the daily chart. I'm not exempt from having hardships with trading if I trade in this environment. Okay, so some of you are emailing me saying, look, I thought this setup was going to work. I thought this setup was going to work over here. It failed. It feels like there's a disconnection. Are the system parameters and the models broken, or is this just something that's like a temporary thing? It's a temporary thing. Okay, and this is the reason why I teach you on month one content the specifics about a low resistance liquidity run, because when you see those elements in the marketplace, then that's the market moves I'm most likely participating in. The ones that are like this, I tend to sit on my hands a lot or scalp intraday. I do like very, very short term 1 minute chart, 5 minute chart type events, and 10, 15 pips, and then I'm out the door. In this environment, the daily chart is directionless. So we're inside of this whole entire range here. We're just hanging around the midpoint of that equilibrium. Nothing in here solidifies a long move to the upside, and nothing really solidifies a move to the downside. We could still be within, and this is what I said months ago, that we could really remain in this long-term range for the rest of the year, and that would be unfortunate, but it is what it is. You can't force it. You can't make it happen to do anything outside of what it's going to do. You have to submit to that. So we'll see. Tomorrow we have the rate announcement for GBP. So that'll be hopefully a welcomed invitation for volatility, and we'll see what happens as a result of that rate decision. And then on Friday we have more news. I think it's for Canadian dollar, if my memory serves me correctly, but it's supposed to be high impact there too. So maybe we'll get something in that pair. All right, so rolling over to euro dollar. All right, again, much like I was saying with the dollar index, we were looking for the likelihood of a continuation on the downside, drawing lower on dollar, and we were looking for a run above this high here. Didn't do it at all. Monday we got real close to it and just gave up the ghost, moved lower. This fair value gap really didn't offer much at all. It just eroded completely through that, then ran the equal lows, sell side liquidity pool here, and then traded back into this fair value gap. Now this one here, I'll show you what I was doing with this and what we get tomorrow for the rate announcement for GBP. Hopefully we'll get some kind of piggyback sympathy play with euro. Again, I don't have a directional bias on cable, as you'll see when we go into it, but I want to see a reaction in here, because I firmly believe that we've created the low of the year. I mean, that's what I believe. I believe this low here will stay intact for the rest of the year for euro. Now, do we go below this fair value gap? I don't know, but I think there's something inside of this fair value gap that could be traded up to around that 111.15, 111.20 level. And then if we get through that, we have the buy side liquidity pool here, and then next one over here, as we were indicating for the last couple of weeks. Moving over into the hourly chart. Okay, this is the notes. I just want to give you a full spectrum of 2 weeks. I said I don't normally do that because I want you all to do this for your own charts. That way it's uniquely yours. It's personal. It's something that you have as a markup on your charts, and you're not just mimicking and copying mine. Okay, so Friday we'll close this bit of it, and it'll just simply go back to a naked chart with any salient points that's pertinent to what is just recently happened and what should happen going forward. All right, so we had Monday's trading really relatively unchanged when we opened. I would have liked to seen the high on Thursday get ran out. It didn't do that. We had distribution come in, relative equal lows taken out, market structure break, then a rally in here. I slept all through the London session on Tuesday, and I was not able to participate in any of this. As much as I would love to be able to say I took some of this here, I did not. Okay, I wish I would have done it, but I missed it. It is what it is. So the market traded all the way down, and I watched this right in here. I was texting back and forth, and this is going to be interesting for some of you folks because that have been around for a long time know that my son Cody doesn't have, well, let me say that, up until recently has not shown an interest in trading, but that has since changed because I don't give him money. I don't support him. I don't provide like money for him to do anything. He has to do everything on his own, and that was my answer to him when he asked for just, hey, can you set me up, because I had it. And I said, no, I'm not going to do that. I want you to learn this skill or go get yourself a working career skill, which he adopted. I'm going to go get a job and wait you out, and then I'll feel guilty and I'll give him money. And now he's since learned that that's not happening. So because he works for his stepfather, doing a menial job with his family company, they pay him a relatively low wage. I think it's like $12 an hour. I think it is. It's not much at all. And as much as it hurts me to see him do what he does with the very little he makes, I knew this day would come. And Cody, if you're listening, I told you so. But anyway, 2 Fridays ago, he actually sent me a text. And I know you're probably saying, what's this got to do with anything? It means a lot, because part of what you're learning here is also a legacy. And you're probably going to encounter this as well with your own children. Like mine, none of my children have an interest in trading up until now. My oldest son, Cody, reached out to me and sent me a text on, like I said, 2 Fridays ago. And he was trading the euro. And right away, like a dad that wants his son to play, football at his old alma mater, which I'm not a sports fan, but I had that surge of that proud dad moment, and I was like, yes, he's finally doing what I wanted to do. And it opened up a dialogue. And since then, we have been going back and forth, and he's visited, and I gave him some insights about what he should be looking for. And I basically just went over what month one content is, because that's how I believe you all should start, because it's a very sound advice. It's a valid approach to learning, and it differentiates, like we've been contrasting in recent weeks here, high resistance liquidity runs versus low resistance liquidity runs. Now, while the higher time frame charts show these high resistance liquidity run conditions, the lower time frames will show low resistance liquidity runs, but they're going to be in the form of scalps, real short-term price moves. But nonetheless, they're there. So I guess the relationship between my son and I regarding the markets has, hopefully come full circle, where I tried to teach him when he was younger, and I was talking to him about it for years. And then when he got old enough to tell me no, as a young adult, I had to accept that. And now he's reaching out to me because he's sick of doing what he's doing at his job. So I told him, I said, look, if you learn how to trade, I'll front you some money, but it's a loan. You're not getting that money to spend. You're going to use that money to build up your own, and then you pay me back. So, and some of you might hear that and say, well, that's rude, or you should just do it anyway. No, he has to have responsibility. So anyway, I was talking to my son, Cody, okay, in case you forgot how I got on that topic. In here, I was watching the euro, and I told him, I said, look at your hourly chart. And I asked him, like I do normally with Twitter, I asked, what do you see? And he saw the fair value gap in hindsight, which is great, but he wasn't able to differentiate the this low and this low, okay, or not differentiate, but to draw the importance of how these were relative equal lows, and the sell side liquidity pool resting below these equal lows would be attacked. So real time with him, I was exchanging the idea that, watch it run. We missed this move in here, but there was a small little one in here on a 15-minute time frame, which I'll drop down into in a moment and show you what it was. But this run here was a low resistance liquidity run on the hourly chart. But on the daily chart, we're still in a condition that could, it could very easily trade right down in here and reverse, which is what you see me doing here. So on Tuesday, when we closed True Day, okay, I knew I would probably not be up to participate in any kind of retracement in Asia. And while I could have got a better fill down on the order block here, I just went in close to the relative equal lows. I was going long on the basis of we were below here, and I wanted to see 111.10 traded up to in here. I thought we'd reach a little bit into this area here. Forget this wick. I don't look at that as important. I see that as a raid, and then it rallied up. Inside of all of this, I wanted to ride that rebalance, and I'm going to drop into a 15-minute time frame, and I'll outline all this, and you actually see me with a stop being tagged, and where I added a second portion, and I'll go into it. But just know that when I drop into the 15-minute time frame, the foundation behind the idea was we were below these equal lows, and I wanted to trade up inside of this imbalance. And I was also trading on the idea that maybe this gap stays open and we just rallied up above here, and I could get some kind of a London session run and capitalize maybe even on the market protraction that is the Judas swing. So even if it was going to go up higher and close all this in, I was hoping it would happen during the London session, have a little bit more market protraction, rebalance up into here, and then if it was going to go lower, I didn't care, because I would have already taken this move out, trading off of the external range liquidity set up with the equal lows being rated, and then a retracement. That's what I was trading off of. So let's drop into a 15-minute time frame. You can see what took place. All right. And I'll scrunch this up a little bit so you can see. There we are. All right, so here's the entry. Again, it was only on the basis I was trading below those previous equal lows. So while this was not down here entering, and it didn't trade on the retracement, I didn't care, because it wasn't that much of a retracement. The entry was, I'm sorry, the low on this was 110.66, and my entry, which is here, right here, I went in at 110.72 and 8 pipettes, which is here, and my stop loss originated right below here. And then once we had this drop down today, I was using this fair value gap, thinking that this was a retracement. And as this candle went down into the fair value gap, I went long with another 2.5 contracts, or 2.5 lots. You can hear the futures trader in me talking now. 5 lots, and then I split it in half, 2.5. And initially it looked pretty good. I thought we were going to run above this short-term high. It wasn't unable to do that, and ultimately came all the way back, stopped me out on both positions. And the cable trade, which you saw me share that on a review, and I'm sorry, a video on Twitter, which I'll show you when we get to the cable. But that was the trade that padded me out for the week. The stop was hit on the 5 lots here, which put me at $99 on the balance, and then I took a hit at $216.70 on here on the 2.5 lots here. So it provides the reasons why, when I tell you it's a day trader's market, or it's a high resistance liquidity environment where it's not real easy for me, this is what I would incur. I would have these types of results if I allowed myself to trade in environments which I've outlined, and very frank with you, these are not my choice conditions. Like I'm looking for a specific criteria in the higher time frame charts that are very, very clear in their direction and what they're reaching for. And unless it's doing that, I'm going to be doing like really, really short 1 minute, 5 minute chart scalps and build my 50 to 75 pips a week doing that. But I felt inclined to show you what it would be like if I was trading in this environment as I normally would. I mean, I would have taken these trades the same way in any other environment that would show a low resistance liquidity run theory or condition. Because I have learned to differentiate when the conditions are not conducive for low resistance and they are high resistance, if I subject myself to the lull and the lure of being in the marketplace, just doing something, okay, this is the type of reactions I would expect to see. And this is exactly what I want to see you or try to avoid. Now, I'm not stating you're going to trade with 100% strike rate, because I don't have that either. You've seen that. But my strike rate will drop precipitously if I trade in environments that I've already deemed high resistance, or therefore low probability. Okay. The levels I look for may get traded too, but not in the time frame that will allow me to hold the positions, because it'll either stay in ranges longer, it'll trade deeper than I expect it to, and they are all characteristics of high resistance liquidity. So if we can follow what is month 1 content and only trade in those environments, and when it's not like that, we need to sit on our hands and be patient, not be chomping at the bit, not growing impatient about, oh, I need to take a trade, I need to do this, I need to do that. If you don't submit to the market in terms of waiting for the right conditions, where it makes it easier, and I know some of you are new, what does that look like? What does that look like? That will come by seeing, because to be honest with you, let's look at the conditions that we've gone through for the last 2 years or so. I've not spent this much time on high resistance because we haven't had the prolonged event like we've had in the dollar index, where we have multiple areas where there's high resistance. Now, because of that, I'm really harping on this, because I'm using the condition to really, hopefully, I'm trying to drive home the importance of differentiating what it looks like right now versus where other instances where I said, liquidity is going to be very easily ran with the low resistance basis that I like to trade in. If I trade using my concepts, using my tools, using my theories, and it's in environments that I've already outlined as high resistance, this is what you get, or this is what I get rather. Okay, so it's not that I'm walking around with a horseshoe in a lucky charm that I'm always right, and I'm never taking a loss. I've learned the hard way, okay, and very painfully and expensively, the pitfalls of forcing trades in environments that I know aren't likely to pan out. But using the tools, using the concepts here, this is what I was aiming for. You can see the take profits. One of them I was seeing, this is like a best case scenario, so don't think that I was looking for that ultimately. In case it happened while I was sleeping, in case it happened, some craziness took place, you always have to have some kind of best case scenario. And I teach that here in the mentorship. So that's what that was. The 111.10 is just inside of here. So we had a fair value gap in here. And I was thinking we could probably reach up into that. And that's all I was looking for the 2.5 lots for that. But it came back and stopped me out. And now think about what has taken place here. I went long 5 here, and then I went long 2.5 here. I was reducing as I was going up. I wasn't adding 10 here, okay, because I had 5 and I went to 10. No, I didn't do that. I learned over time that if I go in with a position here and then I want to add later on, and honestly, everything in here, I trusted it. It looked good. Even this would have been optimal trade entry. We had all of these down close candles in here, which would be a really nice order block. So there's a lot of factors I used in here that I felt that could have panned out. It really could have. But trading in this environment creates this type of event. And if I wasn't in the capacity of teaching and showing you what even I would encounter in this environment like this, I would be disappointed in myself had I traded this and not used it like I did here. Yeah, it's teachable. It's something that, yes, at the time, I believed that this was going to give me a run above here. And then if it got to 111 big figure, I was going to take partials there. That was the plan. I wasn't going to take any partials before that. But you can see it turned on me. So I am human. I'm going to have the same problems you're going to have if you trade in high resistance liquidity run conditions. This is what is normal. Okay, some of you are practicing and you're using these practice sessions as a report card for whether or not you're going to ever be successful at this. And you got to remove that. You got to take that thought process completely out of it. You're doing transactions, and every transaction is just one more level of experience that you're gleaning, and they're not the definitive bottom line of whether you're going to be successful or not. Okay, you're not defined by your last transaction unless that transaction moves you to insolvency, because then it's different. Okay, but you want to be able to allow yourself to have lots of sample sizes and experience in practicing. And don't be afraid to be practicing like I'm doing here. You want to engage in these environments. You want to do more engagements right now than you would any other time, because you want to feel what it's like to be in here. And when you put a trade on, it hangs around and it dips against you a little bit more, and it hangs around and it only moves a little bit in your favor. That's typically what the retail trader has as their normal business. That's what usually typically happens, or it just screams against them immediately. When we trade even with these concepts in an environment that is high resistance, okay, what is actually happening, and why I'm teaching you to respect it and not try to think that you're better than the algo. The algorithm is going to be doing things that I don't have complete understanding with in terms of the signatures for that. So if I would know what they were, then high resistance liquidity runs wouldn't be a factor for me, and I'd still be executing in them. I would still use that condition to be trading. But because I've been successful in finding the signatures in the algorithm in low resistance liquidity runs, when that market environment is present, then I am in there. I'm all over it. But when it's like this, I'm a little bit more laid back. I demand a little bit more in terms of the setups. And quite frankly, what I got out of cable this week, that would have been sufficient for me, and I wouldn't touch it again. But using cable, as I had enough in me for the week, even if I took the losses in these two trades here, you can see it didn't do really any kind of damage whatsoever. It's still over $1,000 demo, but still for the week, it's still good. And I didn't go up in terms of lot sizes. The 5 lots I put on cable, I went right back in. I did the long here with 5. And then I added 2.5. So if I take another trade before the end of the week, I have to trade with 2.5 lots. Okay, so 2.5 lots. Why? Because I've taken a loss here. It wasn't a full 1%. It's well below 1%. But if you look at the effects of a negative transaction, like I had a losing trade. This losing trade puts in a limiter on what I can trade with. Now I can trade a whole lot more than 5 lots based on leverage, 50-1. I don't need 50-1. And I'm trying to teach from 2 vantage points. Number one, what it will look like even if you do try following the rules, but you're in a condition or a market environment that is not conducive for what we are aiming for, which is low resistance. We want it to be so easy, bread and butter setups. That's what it is. And it sounds like, guru talk there. Oh, it's so easy, everybody can do it. It really is like that when it's in the right conditions and low resistance liquidity runs are in play. But when it's not, you have to identify that. And that's what this mentorship really is. You're getting that experience from me. And then I showed this is what you would get, even using the concepts, using the tools, expecting certain outcomes, and they aren't going to pan out as easily. Like, this is nothing like you see me doing my normal, when I'm recording my trades and doing everything. They don't look like this. Okay. And I've learned this over years. I've taken many hits with real money. Okay. Taking big hits, annual salary losses. Okay. And I've learned very quickly that I don't like doing those. I like to have wins that move in my favor. Speed and distance is signatures in my trades, precision entries. That's what I'm looking for. Now, the folks that are outside our mentorship, they think that all trading is like that. And I'm teaching you in here that it's not. There's a strong distinction that is in the marketplace between low resistance liquidity runs and high resistance liquidity runs. So if you've been really just not spending a whole lot of time in the last couple weeks recordings, like on Wednesdays and the weekend reviews, you need to really go back through them and listen to what I'm telling you, because if you contrast these lessons with what you've been taught in month 1, the distinctions between those two are going to fill in a lot of gaps. Okay. And the folks that are getting chewed up, okay, not getting a lot of traction in their trades, getting stopped out a lot, being on the wrong side of the marketplace, the direction's wrong, but it isn't really going anywhere, the other direction either. It's just meandering. Okay. Tuesday was the nice move for Euro. Okay. And I already told you I missed it, but dropping down in the 15-minute time frame, here's that fair value gap in here. We traded right up into it here, and that's the one I was talking to my son live in a text conversation. I said, no, I'll watch it in here, and it had an immediate run. This reaction here and this setup on a 15-minute time frame is low resistance. It's low resistance to get down to those equal lows that I outlined on the hourly chart. So that's when I say we're in a scalper's market. Okay, or a day trader's market. Okay, this is a scalping scenario. Okay, and it's a very easy low resistance liquidity run. Now, I did not trade it because I was busy trying to explain to my son Cody what it looks like and how to watch it, going through the equal lows. I could have easily taken the trade. I could have put it on, but I was, again, talking with him. So I'm hoping, and for those that have faith, pray for him, because I really want him to get, infatuated with this. It seems like something's clicked, because he's talking to me about it every day, sharing charts with me, which is great. Okay, as a dad and as ICT too, I'm hoping that he gets it. I hope he gets it. I think he will, but we'll see. It may take a lot longer because he's got a lot of big ideas about what it is, and his time expectations are really, really unreasonable. It's kind of like what everybody else says when they get into trading. They all want to quit their job in 3 months. Sometimes less than that. But anyway, so we had a failure in seeing any return back up in here. These highs, these may be a factor tonight into tomorrow. We'll see. It depends on how we trade below the low on Tuesday. If we trade below that and reject, the next buy side liquidity pool is here. If we do not reject and we keep going lower, 110, what is it, 45? What's that high here? 110.45 is the low or the bottom of the fair value gap. That would be the very low I would expect to see it trade and have some kind of reaction there. But we also have consequent encouragement to be mindful of. So we'll split that in half. I'll let you do that on your own charts, and be mindful that could also be where we could trade down into and see a tradable bounce. I'd like to see the dollar just fill this in. If it's going to do it, go about halfway and then really strongly reject. Otherwise, you got to be really attentive and see if we're going to go through that, because if we go through it, if it comes back down, this will act as a balanced price range, and this will act more or less like a support level, and it could propel price over time, not in one single day obviously, but it could eventually lead to a support idea that leads to a run into the buy side liquidity pool. Then that would be the framework. That's the only way I would like to see it happen. Or if it creates a gap in here, if it comes back down and trades into the fair value gap, not necessarily coming back down into the fair value gap, if we went above it, that would be the only scenario I would see as a buy side run on the liquidity here. Otherwise, we're sideways to waiting to see if we do get this fair value gap on our side to make a run for the sell side liquidity pool here and eat into this. All right, so that's that. Cable, I still like this one here, and I think that's possible still by the end of the year, Christmas time or so. Nothing in here needs to be rebalanced, in my opinion. It's been back and forth, back and forth. We have relative equal lows in here. That could be what they use for the run tomorrow on the rate announcement. So the low comes in at 127.87. So look for 127.85, 127.80. Drop into an hourly chart. Okay, and zoom out just a little bit. All right, so you'll see that's that little price drop I did. Optimal trade entry is what I labeled it. Everybody in the mentorship knows what this really was, and I'll outline it in a moment. We have relative equal lows in here. That is also, again, what I was identifying just a moment ago on the daily chart. They could attack that going into the rate announcement. If we drop into a 15-minute time frame, and I'll have to zoom in. All right, so we had a fair value gap right in here. I entered right at the top of the fair value gap, and we ended up trading a little bit deeper than that. And I was trusting the fact we had already rebalanced with this fair value gap in here, and we broke down, and we had relative equal lows all through here. So this was just way too obvious for sell side liquidity not to be ran out. And I had a market move going against where the sell side liquidity was resting below the lows. The market was rallying up. As it was rallying up, I sold right in here and had a little bit of heat. The entry I took was 128.92 and a half, and the high, if I get to pop up, was 99. So 7 and 4 pip bets. So I had 7 pips drawdown on this entry here. And to me, that's a lot. I rarely have that much of a drawdown, but it is what it is. It was still tradable. It still was manageable, but nonetheless, we had a nice reaction there. And you've seen the entry in the recording, and it came down and hit it, filled it, and the low came in at 28.58 and 7 pipettes. So I got out just about what is that? Less than 10 pips before the short-term reversal in here, and then consolidation, and then they rallied it one more time up, and then sent it lower today. So really nice little movement in here. Low resistance liquidity run in the context of a higher time frame daily high resistance liquidity run or conditions in the marketplace. You're forced to go down in lower time frames. Okay, so I get a lot of questions all the time, and about when I say it's a day trader's market or it's a scalper's market, what leads me to say those types of things. And this is what I've been talking about in this video, particularly here. I'm talking about the very strong contrast between the market environments that I outline in month 1 lessons versus what we're seeing right now. So if the daily charts and the higher time frame charts are just really not clear about what side they want to go on, don't look at them. Go right down to the lower time frames and get your pips on the smaller micro moves. Okay, and remember that spreadsheet I was showing examples of when we build up equity and how we look for goals. My lowest threshold is 10 pips. Okay, so I can get 5-10 pip trades a week, and I don't care what market environment we have, it's there. You can find them on 1 minute and 5 minute charts. They're there every single trading day. The problem is you may not have that psychological makeup to worry with it like that, and you insist on, because of your lifestyle, your schedule, and your just personality, really, it won't allow you to do that. And that's because you're still new, and over time you will take on more flexible stances in the market when you get more experience. Right now you're standing on your preconceived notions about this is how it should be because I know me. And I'm referring to you as the person speaking there. In other words, you're saying to yourself internally, and maybe outwardly while you're watching the videos when you're listening to me, you're saying, no, that's not me, or yes, that's me, or you're nodding your head, that type of thing. If we were in the room together, you would be telling me, yes, that's not true about me, or no, that's not true about me. So you are coming into this with ideas about what it should be like for you. And it's difficult to put them aside and then allow yourself to grow. And that's why I force you all in the lower time frames, because it gives you a whole lot of experience. Because this whole setup in here that creates this low resistance liquidity run, if I covered this 15-minute time frame chart identifier up and you didn't see that, and I told you this was a daily chart, you would have no problem seeing this as a setup and say, oh yeah, I get that. It's the same thing. If these candles were daily, not 15 minutes, and I said, okay, we have a low resistance liquidity run, and so we're going to run these equal lows out, and you'd all see it, and this could be probably hundreds of pips, not in 30 pip run. Okay, so it's all relative. And when we have conditions where I say we're in a scalper's market or we're in a day trader's market, I'm suggesting to you that the daily charts are either at a position where it's conflicting, where it could literally go either way, and because it's a 50-50, I'm not confident, or many times I'll just come out and say, I don't know what it's going to do. We have to wait for more information. And when those instances occur, it doesn't mean don't do anything. It means immediately that your protocol drop down to 1 and 5 minute charts and study and practice in that environment, because there's going to be low resistance liquidity runs every single day. But the problem is when you hear me say it's that case that we're in a high resistance condition, and therefore the daily charts are not going to be very clear with directional bias, throw directional bias out the window. Go right down into the 1 and 5 minute chart where you're trading off of intraday volatility. You don't need daily bias for that. It helps, but in high resistance conditions on daily chart, you have to go where the liquidities are going to be very easily determined and how you can see them in the chart. And this is what I did, and you watch me do the recording. So yes, it's optimal trade entry, but the whole framework was the fair value gap in here, and we were trading up into these up close candles, which is the bearish order block. So you can see the bottom of the candle here. I'm into that and the fair value gap. So that's one of my favorite setups when I have equal lows and we're trading back onto a bearish order block and a fair value gap, and it's just a real quick run up into it against where I know it's most likely going to reach for. That's my bread and butter. Like, that is my setup. You know, I can find this on any time frame every single day. Okay, there's one on a 1 minute and 5 minute chart. It's there every single day. Okay, and you can find a buy and a sell. So they're there. You can see them. They're there if you study and look for it. So will it always offer 30 pips? Obviously not, because if you're looking at a 1 minute chart, it's, you know, it'll give you 10, and you just have to give a couple different 10 pip setups throughout the week to get your 50 or whatever your objective would be. But anyway, I think that's going to be it. Let me just mention one quick thing about dollar CAD. This thing here, I don't know what it's doing. Okay, I'm going to concede and say I don't know what it's going to do, and I'm probably wrong. And I don't know if it's going to pop up in here on Friday to this fair value gap, or if it's going to go up into here, or if it's holding this area here for bull flag hopers. Hopers. If it's holding in here to then fake them out and go lower. I like these equal lows in here. I don't think that they're going to stay, even with this retracement down here and this pop up. I think that if we get the news on Friday, and I don't recall what it was off the top of my head, because this was the rate announcement in here, and then notice we have not had any kind of continuation. Okay, so it's been an unchanged rate announcement, and at 1.75%, there's really, you know, there's no real clear, okay, it's obviously going to do this or it's going to do that. It has reasons to do both sides. We have a fair value gap here, and we have a fair value gap here, and we're at equilibrium between the high and the low. So again, very, very challenging conditions, and that's the reason why I said I concede and I don't know what it's going to do. Okay, versus if it would have already moved, you know, outside of the equilibrium, okay, or moved away from equilibrium and created an imbalance, then it's easier for me to say, okay, it's going to rebalance to this price point and run for sell side lower. Or if it had run since the rate announcement higher and created an imbalance and came back down in, then I would say, okay, and these highs hadn't been taken out yet, then it would say, okay, Friday's news is probably going to set up a stage for a run to here. Okay, so you can see how there's a method behind what I'm telling you, and there are all the things I outlined in the mentorship at various months. Okay, so that way when you get to those lessons, you'll say, oh yeah, that's why he says what he says. And that's why I also don't go into great detail about why I say the things I say all the time, because all of you at month 1 are hearing the same comments that charter members are hearing right now. They're not watching a different video. Okay, you're all hearing the same thing. I'm only making one video on Wednesday and one video on the weekend, and then you all hear it. But the lessons that you get taught in these commentaries is the mentorship. It's not the lessons at the top each month. Okay, there's 8 lessons. They're just foundational. Okay, everyone outside the mentorship thinks that's the mentorship. No, it's not. It's this stuff here that I'm talking to you in the, well, whatever, how long we've been talking, or you've been listening rather. These are the things that you have to learn and know, and you only are going to learn them by being with me on a week by week basis and seeing the things pan out. And then when I outline things that are going to be problematic or challenging, and then you see that, it saves you years of trying to figure out what caused all those things that was a barrier to seeing price do what we've outlined or what you would have rather seen in the price runs. So anyway, all that said, we have, again, news tomorrow for cable. So just be mindful that, you know, this is the pair to be watching tomorrow. We'll be looking for any kind of scenario that promotes a run on liquidity. Let's go out to a hourly chart before I close this up. I like the liquidity pool down here. Just be mindful of that. I think that this is probably what we're going to see. If they allow the gap on dollar to stay open, it doesn't look like they probably will, though. Looks like they want to dip it up in here. I'd like to see this occur, okay, running into here at the same time Cable's rate announcement comes out, but it's a lot of time. It's good grief. It's a lot of time between now and then. I'd like to see this run here at the same time that fair value gap gets filled in on the dollar. Those are the two things or two events I'd like to see happen at the same time. And it sounds like it's not likely to occur. And normally it wouldn't, because this is a lot of pips to get down there. But it can jump down there and reprice to it on the basis of that rate announcement. Now, notice what I'm saying. I'm not saying that it's going to be a rate increase or a rate decrease or unchanged. I don't care. I don't care what that is going to be. It's the fact that they're doing that rate announcement. And because of that, the volatility and the smoke screen that it provides, they can do a whole lot more repricing, and no one thinks anything of it. They don't really say anything about it being manipulation. They don't say that it's rigged. They just think it's pricing in the number. Okay, that's what they've always said for years and years and years. And it's true to an extent. They are pricing the number they want on the smoke screen that everybody expects normal volatility. Market does these types of events without some reason to blame it on, okay, some news event, news driver. Then it would scare people and they would never trade because it'd be too random then, when nothing really about these markets are random, okay, except for how long markets stay in conditions that are high resistance. That's the variable that I have not figured out. So how long does it stay like this, Michael? I don't know. We have to wait for the market to have that displacement, that elephant that jumps in that children's pool and causes the water to displace. Okay, we see it in price. When it happens, we know what we're looking for, and then we say, okay, now we know what we're going to do now. But right at the moment, we have to wait. We have to let them push price around, create an imbalance, and then be able to target liquidity after that occurs. And it takes a lot of patience, and it takes an even more patient individual when you don't know what I just said because you're new. But folks that have gone through months and now years with me, when I talk to you like this, you can call up and recall conditions where we had things we had to wait for. Okay, and there's a lot of things I said in this video that are very helpful to those individuals that have been here for a while. Probably not so much help to the new students because it's creating even more questions. And that's normal. You should record your questions, but you'll find those answers as you go forward and going back through all the archives of the commentary. Go back and look in your charts and see where certain things were in play, and then see what I was saying about that market at that time and what my ideas and thoughts were about it then. And it'll help you bridge a lot of the questions that you probably have that are, just basically gnawing at you. And you can't wait till you get to charter level to be able to see, all the other things that you don't see just in the individual month by month. The price action models will help fill in gaps, but they're also going to create new gaps and new questions. The trading plans that come with those models starting in January, they fill in all the blanks. Okay, and then we have algorithmic principles that will be universal that you can apply at certain conditions in the marketplace. And there isn't a lot of them, because if I did that, it would just create, I'd have to do this mentorship for 20 years. I'm not doing that. So just know that there is a progression. And when markets are difficult, and yes, they're difficult right now. They're difficult for me because I don't like scalping. I don't like doing these 5-minute setups. I don't like doing that. I want to get in, get the weekly range, and know and trust that the weekly range is going to unfold one-sided or the other. And I don't have that right now. Okay, I don't have it. I haven't had it. I haven't trusted it for months. So just know that I'm feeling the same thing you're feeling, but I'm not complaining about it. I'm not going on Twitter and crying. Okay, oh, I'm frustrated. Okay, that's normal for you to feel this way. But I've been here before, dozens and dozens of times, and I know it's temporary, and I know what comes on the other side of this. We have very easy trading. Okay, just know that this is a normal function in the way the markets trade. And there's a lot of factors right now. There's a lot of things happening on the geopolitical front. There's things happening on the state side. Okay, in the United States, there's all kinds of impeachment. What's going to happen if they, can sway Republicans and get a vote to remove him from power? There's so many things. There's so many distractions right now. Okay, and I think that all of this is taking our eyes away from something that is looming. And I don't know what that is. And I'm not trying to sound like Chicken Little, the sky's going to fall, and then something bad happens. See, I told you so. It just feels off. Something I think is about to happen, and there's just so many things. There's little fires right now everywhere. But I think the real, storm is, it's approaching. And when it hits, it's going to cause a lot of waves in the marketplace. And I'm not saying it's going to be a bullish move or a bearish move. I don't care really. If the market wants to go higher for the stocks, great. If it wants to crash, great. Either way, it creates volatility, and volatility brings a opportunity. It's a ton of opportunity, but we have to get these daily charts moving with a lot of energy, because then it makes trading so much easier, and then we'll milk it until we can't, and then we'll have to be sitting in this period again, waiting for another higher time frame displacement. And this is how it happens, on a long scale of trading on your career that's yet to really see a lot of events because you're just recently starting. Not all of you folks, I know some of you have been here around for a while, even before you met me, but the longevity of being in the marketplace will bring you a great deal of insight, whether you were profitable or not. You've seen things. There's a lot of folks that were trading back in the 2000s, and you saw the .com bubble, okay? And that was the Bitcoin run of the time then, okay? It ran up and then crashed, okay? Everyone saw all that stuff that was watching the markets then. So you have that experience. You have that under your belt. And now you're seeing, with a great deal of clarity and detail being provided to you by way of weekly commentaries, I'm explaining why the markets are going to be harder. Now, I didn't see this in books. I never understood except for losing money and then keeping detailed journals about what I was seeing, what were the things that led up to it, and all those signatures, okay, those things repeat. And because I've been doing this for so long, I know when these conditions are most likely going to occur. And when they are there, I tell you. And when I tell you these things, a lot of you still press it hard. And it's almost like you're arm wrestling. Like you want to be able to say, it was hard, but I did this. And like it's going to give you a trophy. I'm not high-fiving you when you do that. Okay? I'm not going to tell you, well done. I'm not going to like your post, okay, on Twitter. It's not because I'm mad because you found something that I was telling you I wasn't going to do. I'm telling you you're trading retail because you're doing the very thing that I'm teaching you to avoid. Yes, there's a lot of moves every single week that we purposely let go by. I'm taking your attention to specific things in the marketplace, and I want you to focus there. When they are under study, you're going to learn the intended lessons. And when those lessons are understood, when I talk about other things that's going to be taught in future lessons, I will be able to refer back to this and say that experience that you gleaned about watching that particular thing and staying on the sidelines or doing this or doing that, you will know exactly what I mean because you have gleaned the experience from doing it. Not doing the very opposite of what I told you to do. Okay? If I tell you, don't trade this, and then you go in and you trade it because you want to be a wise guy, okay, and if it happens to work out for you, you're going to falsely attribute that as skill, just like I did when I first started trading, and then it was not skill. It was complete luck. So then you're going to put yourself in a situation where you're going to pit your pseudo skill against almost 3 decades of understanding and prowess. It's not ego. It's just facts. So you're looking at things from a very micro scale of just recently looking at it from what I've taught you. and you're overthinking it, overanalyzing it, and comparing and contrasting that with when I tell you to stay out, or if I tell you to focus on one pair or not, don't look at anything else, and you're doing other things in other pairs, you're missing the intended teachings by staying focused on the two pairs that we're looking at. Because every market will have what we have right now going on in euro and British pound. Every market. Doesn't matter if you stay on stock indices, or if you trade bond market, or if you trade crypto. Well, crypto does it a lot. That's why I can't stand it. It's like it stays in these long periods of high resistance, or just it won't go anywhere. I can't trade a market like that. Forget about it. And that's another reason why I don't touch them. They don't make any sense to me. Okay, they're not consistent. They don't deliver every single day like all the other markets that I follow. Now, if you don't agree with what I said here, trust me, keep doing what you're doing, and you're going to not learn anything except for, I wish I would have listened. Because the short-term luck that you might be having doing whatever you're doing outside of the things I'm telling you to focus on, that doesn't last. Trust me when I tell you, that does not last. It's just like anything else. People open up demo accounts and they think they made a lot of money. They pick all these wins, and then they put live money in, and everything goes out the window. Okay? Because what they did was falsely attribute skill to randomness. Okay? You cannot learn what you're supposed to learn here unless you're focused on the very things I'm pointing at. And if I say sit still, don't do anything with it. And all the things that you're going to feel and all the things you're going to be thinking about while you're waiting, that is the lesson. Because you're going to reveal things about you that I can't teach you because I don't know each of you. But when you identify what they are and you record them in your journal, you're going to be anxious about specific things. You're going to be impatient about specific things. You're going to falsely see, okay, or you're going to think that you see things in the chart, but because the conditions are not conducive for it, you will still record that you think this is what's occurring. And then because you didn't really engage with it, didn't put any money behind it, didn't put a demo account set up, nothing, no execution was done. If it doesn't pan out, you can go back and say, wow, look, this is what I saw. This is what I would have done had I been trading, and it didn't pan out. And I saved myself that pain, but I gained a deposit in experience. And while it didn't pan out like I would have seen if I was really trying to trade it, it was not positive in that regard. It was a positive because I refrained from trading in it, and I don't have that negative, toxic view about I wish I would have stayed out. Okay? That's the purpose of when I tell you to sit still or don't engage right now, or we're waiting for more information, or if I say this is what we're looking for, but it's high resistance. Yeah, it could pan out. Could. That's the key word, could. Now, when it's high resistance, it's going to be like that. When it's low resistance, I'll say it's going to most likely trade down here, and we're focused on one side of the marketplace, and this is what we're looking for, and it delivers really quick, and it's really, really nice. When those conditions are in the marketplace, I tell you that. And when it's not, I'm telling you that. And I want you to understand how we'll look at it. I mean, look at what we're seeing here in cable. I mean, this is a lot of back and forth. But on the lower time frames, as you showed here, you can get these low resistance liquidity runs, but you can't rely on that higher time frame to help you in that regard, because they're holding the higher time frame. So if the higher time frame chart's being held in consolidation, you're forced to drop down to a lower time frame if you're going to trade and have any kind of framework behind it for a low resistance idea. So again, if you're new, I probably talked all kinds of circles, and maybe it wasn't as beneficial to you as it is for the seasoned students here, but it's in the recording now, and you have hundreds of videos to go back through in archives. Just trust me, you will get it. But these are the hardest market conditions to be in right now. Okay, they're very, very hard. If I looked back on all of my trading, these conditions right now are the absolute hardest. There's never been a market condition that I've ever endured once I understood what I was doing. Let me rephrase that. Once the market started going down, okay, because I was only buying. I was a perma bull when I first started trading. And the luck I had was because we were in vertical, premium-driven commercial bull markets where everything was just going up in the commodity market. That's the only reason why I was right. When it was not in that situation and I was trying to buy, the markets were actually bearish and I was losing money, lots of it, and I couldn't figure it out. 6 years after I started trading, I had figured out what I was supposed to be doing. Okay, so once that occurred, take that time to now. Okay, so 21 years. Out of the last 21 years, the market conditions that are happening right now that you're in this mentorship learning in, this is the hardest it's ever been. Ever. Now, I can't make a statement any stronger or more emphatic than that one. You're learning in a very difficult time. These markets will not stay like this, okay? Greed will prevent it. They're going to move the markets around, create all kinds of excitement, because eventually what happens is no one starts putting money in. And volatility shrinks down, the volume reduces, commissions reduce. They don't make money like that. Trust me, this is the reason why I tell you this stuff is never going to stop working. It's never going to cease being effective. But there'll be periods where we have to wait around, because once it starts hurting their pockets, then they'll put it in motion. They'll spin the wheel harder. And that's all we're waiting for. And that's the specific reasons why I tell you to just be patient. But the folks that come in here and they want to get signals every day, signals every week, and they want to see wins and wins and wins and wins and wins, and not really learn how to trade and how to decipher what the market's doing and plan for these events and know what to do when they're involved in it, like it is right now, you're never going to make money long term. And you might be profitable in the short term, but you're going to blow your account and you'll never be able to recoup it because you won't understand what you're supposed to be learning right now, because you're just listening for tell me where it's going to go next. And if I tell you we don't know what it's going to happen next, you attribute that as no one knows what's going on and you don't know what you're talking about. When in fact, I know exactly what I'm talking about. I'm not putting my live money in here. Okay? That's what I'm telling you. It's not that type of market. It's just really not. So if you're going to learn, this is one of the best instances to learn, because you're learning low resistance signatures. When the markets become fast and loose again, man, you're going to have no problem finding money. Okay, it's going to be very easy. Up, down, it's whatever market you want to trade, it'll be fast and loose. But right now, it's hard. And this hard condition, if you're able to find low resistance liquidity runs on the smaller short-term time frames, that same concept you're going to apply to a higher time frame when the markets loosen up and start becoming more volatile. In your notebook, in your notes, in your journal, I want you to write this down. Consolidated markets will not remain consolidated forever. Period. Banks are only profitable when there is transactions. Transactions and excitement and interest are only instigated by big, fast money moves. That's what you wait for. That's exactly what we're waiting for. And when that occurs, it may happen suddenly where we're expecting, where I may outline something specific in the marketplace. I'm looking for a particular run to a certain level. And it may completely be against that entirely and rail against that whole theory. And guess what? That's wonderful, because I don't care at that point. I know what it's done. There's a displacement. Maybe I wasn't a trade. Maybe I took a loss. I don't care, because everything changes and the paradigm shift is, okay, they've already tipped their hand. And that's why I'm trying to tell you that you never have to worry about these things falling apart or not working in the future. The problem is you have to align yourself, your personality, your style of trading with the market condition. And the market condition is going to dictate how you trade it. And if you don't have the mindset and the skill set and the concepts to align yourself with that market environment, it's impossible for you to find consistency or profitability. And it sounds like, this whole video has been negative. It's about, there is no opportunity, or you're not going to be successful. When in fact, everything I just told you is how to find success in this, because you're avoiding the most likely scenarios for you to fail. And you'll know why you're avoiding it, and by not engaging as frequently as you probably would normally want to, and what you're specifically waiting for. And drawing the contrast between high resistance versus low resistance. Okay, so again, it's not likely I'm going to take another trade this week, because to do so, I would probably eat up into whatever paper profits I've shown here. This is where I would stop with live funds. I wouldn't do anything beyond this point. We have the rate announcement tomorrow. I would just practice a demo, and engage that way. I wouldn't put any kind of further risk in. But I've already outlined it. I like this area here, just as a one more point. I think that this could be what they try to attack as a rate announcement objective. If I'm wrong and they rail against it higher, and then we get a retracement but not a complete reversal, then they'll probably want to run this equal high here. But I think really it's all here. I think this is where they want to take it. And again, the reason why I say that is we have this up here. And if we get above that, it has to trade and close above on a daily basis. If it spikes through and then comes back down below it, I want to close on the daily, then that was just a fill and basically an overzealous move. And then I would look for this imbalance to be filled. Otherwise, if we trade above the fair value gap and close there, then I'm going to be looking at this fair value gap as a means of support, and the price range that would be here, and whatever the candle creates, whether it be the candle that's forming right now for Thursday. The candle that would be forming for Thursday. If it runs through that, that would be the bounce price range. The down move here, the up move that would be subsequent to what we have here. Trading back down into this fair value gap at that time would be considered bullish. And we would find some support likely there, and then start to press higher up into the buy side liquidity pool. But right now, mixed to sideways, but I'm looking for reasons to see if it wants to roll over the other way. We'd have to see some crazy bullishness on cable as a result. And with all the Brexit stuff that's going on, highly unlikely. Okay, highly unlikely. So that was the other reason why I elect to go here. So I'm factoring in sentiment. Okay, that's what I just explained to you, because all of the uncertainty about Brexit, the end of January, the vote has been pushed back till then. So there's really no incentive to be buying cable. No one knows what to expect next. Okay, so the central bank knows this, because there's no real takers on cable as a result of that, and large funds aren't really dogpiling in this one way or the other. It is in the central bank's hands to create some excitement, and it doesn't have to be a bullish move or a bearish move to create that excitement. It could be either or. But we have this market being in a range ahead of the rate announcement, and we'll see tomorrow how much of a impact that rate announcement has. If it's unchanged, if it's a hike or if it's a cut, who cares? We don't care about that. We never care about that. The only time the rates specifically are of any importance is when we're doing differentials, okay, for longer term analysis. And we're not in the market moves that create those type of setups. So I'm not interested in differentials. I'm not looking for carry trades. I don't care about that. I'm looking for where is the market likely to go for the next 6 weeks. That's what I'm looking for. That's my range of analysis. And I'm not seeing very clear horizons for that. So again, we're waiting for the volatility. Focus down here. Okay, and we'll see what we get by way of the rate announcement. Until I talk to you again, if I see something of any importance, or if there's a review that needs to be done, or something I want to draw your attention to after the fact, I will put a post on the forum and send a tweet to you by way of Twitter. Until I talk to you this weekend on Friday evening, good luck, good trading, and be safe.